The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's program brought to you by...
So she didn't inherit Grandpa's jawline, but there's no doubt she's family. It's your job to raise her, and it can be tough. Let's make it easier. With technology and automation, you can do more, like produce high-quality bales with way less effort. Built-in sensors can measure bale moisture and size, so you can monitor quality on the go and manage your fleet from your phone. Sit back and enjoy effortless operation. Discover an easier way to work.
Well, on Thursday, we had a pretty solid day in the grain and oilseed trade with soybeans starting the lead on the day, and that spilled over into corn and then into Chicago wheat as well. Cattle had another good day to the upside. I'd say, all in all, a pretty solid day on Thursday. Let's talk about what's happening in the markets. Joining us here on Market Talk, powered by John Deere Operations Center, Brian Doherty with Total Farm Marketing. Brian, welcome back to the show, sir. Hope your week has been going well. And Thursday's action, again, pretty solid day overall, I'd say.
Yeah, it is pretty solid day. In particular, corn. You mentioned that beans sort of led the way higher, and I think it did so on, again, comments from the Secretary of Agriculture, Collins, and she talked about when the government reopens. I'll read this headline. Once the shutdown lifts, we'll be ready to roll. Farmers aid. So I think initially that's a good sign that farmers are. At least it's a bit of news. It gives the market some optimism that farmers, if they need cash flow, don't have to necessarily sell if something's coming. So I don't know if I want to read into it much more beyond that, but that would be my takeaway. And we're harvest should be pushing right along. It should be over 50% in both. I think both corn and beans. But in particular soybeans, so probably in that 70%, maybe higher level. There are some rain delays this week. Selling interest seems to be only limited in farmers that really have to decide whether they want to store beans or sell beans, and so we are hearing from farmers who've sold beans, but they want to be back in, and so we talk about that as well. But consequential news is still lacking with the government shutdown. I don't have export sales. Export inspections we can get. Those were good this week for corn and beans. And the market continues to consolidate. Corn, Jesse, went down to a 50% retracement of the charts and found buying interest.
And I wonder, too, we think about that selling interest you mentioned and just harvest, that general harvest seasonality, I think, is at play a little bit here as well in these markets. And, on the corn side, I'm hearing more anecdotal reports about southern rust impacts. And I'm not sure, if you're hearing that when you talk with producers as they're busy harvesting, but little things like that, without some of these government reports that we get used to, we're kind of having to lean on some of these different little pieces of information, I guess, to impact the market in certain ways, Brian.
Yeah, and that's what you're hearing from people like me who talk to farmers all day long, every day. And so we get those, I'm going to call them data points, but statistically, if you went to a university, they kind of laugh you out of the room and say that's not enough. But it is pretty good, because we get a feel for it. So what farmers are telling us in Ohio and what we're hearing in South Dakota, if we're getting a theme, and the theme is variability to the corn and soybean crop, which is typical. But when you look at the kind of yields that are on the books currently from the USDA, that's not a crop with much variability. That is a crop that is high level. And so in my world, I think the USDA is too high in those numbers, and we'll find out, maybe in months to come. But anecdotally, the rust is probably the biggest thing in corn. To me, maybe the biggest story in corn this year, because of the drawdown in yield. Let's say farmers thought they were going to, at the end of July, early August, look at maybe a 240, 250 bushel yield. What I'm hearing is 210, 220, not enough to really complain, but certainly not what they hope for. And that variability, I think, brings down the national average.
I'll bring this up to get your thoughts here. I saw you had an article earlier in the week for the folks over at Successful Farming talking about sideways grain markets. We've kind of seen that to some degree here this week outside of Thursday's move, but in the title you talk about could it signal a big move ahead? I mean, your thoughts on that and how producers could maybe set themselves up with their risk management here, depending on what we see, especially post harvest, Brian.
Well, see that's a great point, and I thank you for bringing that up. Uh, we have been sideways, and the last trough of corn prices we had really was like 2013 to 2019. It's a very long trough, but when they blew out of that trough, they blew out in a big way. In that case, they moved much higher into the early 2020s, over $8 again. So you're seeing the same setup here. We've been in a downtrend. The downtrend is really behind the market. We've been in this sideways pattern for nearly 2 years now. And typically what happens is, just if I could sort of break down the anatomy of a market, um, and look at that anatomy, we'd see that markets, they rally. They have a tail, sometimes a long tail. That, when you think about a tail of an animal, that's how prices, and then they go sideways for a while. They build demand back, decrease supply in some capacities usually, and all of a sudden something comes along that's disruptive and up the market goes again. That's why it can get kind of violent. But you also get, if you break down the anatomy of a sideways trading market, you get two or three different what I call unintentional buys that happen. So you got the buyers who are buying because they need the product or believe the market's going higher. The market does eventually go higher for some reason. It breaks resistance. That uncovers buy stop orders. Those are orders uh, traders put in or farmers put in to exit short positions or initiate long positions. So once the market makes a technical move above a level, you get that type of activity. And then if farmers or traders are, let's say, short the market and they don't want the risk anymore, they might just be getting out for margin call reasons or buying reasons. And then you get the latecomers, those who really chase a market thinking, okay, this now I've got confidence, this is the breakout, this is where I want to buy. So a lot of times the anatomy is sideways. Push resistance, if you break resistance covering, if you get a fundamental fact or something that's a little more supportive, a bunch of new buying and speculative buying, and that pushes the market higher and can lead to a violent upswing or a violent downswing. Typically, the upswings, though, come pretty fast and furious. So to stay in front of the market, I call it a balanced approach. If you're making cash sales, you want to look at the re-ownership strategies and get some time under your belt. Who knows what South America will bring? Who knows what China and the US and all this stuff will be look like in 3 months or 2 months or 6 months? Or if you're going to hang on to inventory, there's a carry in the market. Make sure that you're looking at the carry and defending that. I would look at some put options out there, or just potentially just forward contracting. But it's about balance. It's about being prepared. Nobody, the old saying is nobody plans to fail, uh, but failing to plan can be problematic.
Yeah, that's a great, great thought to keep in the back of our mind. Brian Doherty with us from Total Farm Marketing. Let's go over to the livestock trade. Let's talk cattle. Wednesday, I wondered futures. We kind of felt like we were spreading a little bit in the futures trade. Maybe it was a pause day. Here we are again Thursday, more support. What could you say about cattle? Just continuing to get record-breaking prices here, Brian. And I know it's a fun ride for a lot of folks, but again, risk management is very key here as well.
Oh, it's more important than ever, right? So marketing never takes a day off. That's kind of a newer phrase I've coined. Or maybe somebody else did and I stole it. I don't know, but I've been using it. And and it's true. You look at the cattle market, all of a sudden another extension, another acceleration upward. And it just makes one wonder, where does it have to go before demand just says enough? And it appears that we're in a protein craze, or people like protein, they want their beef, and those who can afford it, doesn't seem to matter as much. There's probably a little bit more to that. I think there's people who are racking up credit card debt. We hear that, see that. They're probably spending where they shouldn't be. But there's also this idea that inflation has been everywhere around us. And So beef kind of gets lost in there. If it was standing alone, it would really stick out. But it kind of gets lost in there. But in talking just in my circles, talking to people, what I'm hearing them say is, well, we're not taking this vacation this year, or things a little tighter, or we're not going to spend here, or the remodel job is on hold because that's expensive. But they're going out to eat, or they're buying. So maybe that's a better explanation as to this move. I think fundamentally the action activity in auction barns has been so strong, and it's rewarded any farmer that bought feeders, because the trend, it's hardly been a correction on the live cattle market at all, that it's likely rewarded farmers, ranchers who took the risk to put cattle into the feedlot. At some point that doesn't, and that's where what you're talking about, that you spend a lot of money on these feeders, and that may have driven the live cattle market into deferred months, because the trade looks and goes, geez, if they're willing to pay this much for feeders, we're going to be short supply. So the back months move higher. But if it doesn't hold, or this bubble pops, or I call it a bubble, or this balloon gets a leak, or whatever you want to call it, some analogy, wow, look out below. There's a lot of room to correct and still look bullish. But that room to correct could be really, really economically detrimental to those who have a lot of money invested into these feeders.
And I think about this as well, Brian, with feeders specifically. I mean, I look at the board and I joked about this with someone earlier the week, but we're a lot closer to 4 than we are to 3. I mean, not knowing where this thing is going to go. I mean, could we be talking about putting 4 handles on some of these deferred contracts and feeders? Again, it's just it's such a wild market right now that it's hard to really pin some of this down at times, Brian.
Well, we did talk about kind of markets that break a sideways pattern, right? But markets that are in an uptrend can uptrend for a long period of time, and then seemingly they just accelerate. Or same thing as you reach toward a bottom. So the question is, and we've been asking this for several months, is the market accelerating toward a top? And you could, I think, make the argument that it is, certainly in the last few weeks. Big changes. Cattle are up from, to go back to about a year ago, up about 33% in value ish. That is a big change in a short period of time. So maybe it's the new norm with this tighter supply, but this tighter supply just didn't develop overnight. That's been out there for some time. And I have cattle farmers that buy cattle, put them in the lots, or feed them out themselves. And they've been saying that their buyers say, hey, there's not a lot out there. That's been 3-4 years ago already. So it's not like this is new, but the acceleration reality of it is, at the same time, there seems to be, and I read this somewhere, so I didn't coin this phrase, but this protein craze, and more consumption of protein products and those type of things. So the risk is big, the risk is real, the acceleration is here. Be careful what you wish for, because now you've got a lot of risk paying for the really a lot of dollar value into the cattle complex, into the cattle feeders in particular.
Hogs, I know we're a little bit lower on the day Thursday. Dairy trade, kind of a mixed bag. It looked like some green there. What else stands out to you when we're talking in the protein complex, whether you're looking hogs or the milk market, et cetera? What else stands out to you this week, Brian?
What else stands out is that the trade seems to want to buy cattle and sell hogs lately, and I'm kind of perplexed at that. Um, that we can't pencil in better consumer demand for a cheaper product in the retail sector. So I think hogs, in particular, the front months, I look at something like December hogs trading under $83. And I know the index is one thing in December hogs, but December hogs got about 6 weeks to go, and the index is trading at $97. So that's quite a spread. So either cash is going to take a bit of a spill yet, or the board's going to come up. Milk, a lot of volatility lately. Again, a downtrend market, a market that just doesn't look healthy. A lot of product, but there's a big undercurrent of demand worldwide for dairy products, milk products, and that should help to shore up underlying support. I sound a bit of a broken record, though. I just don't see any path to $20 milk right now unless there's some kind of supply disruption, because the production reports, when they were coming out, so we don't have the last one, better efficiency, more cows, uh, beef on or dairy on beef or beef on dairy, however you want to call it. These incentives to breed these cows to beef calves, just incredible. And so I just don't see anything slowing that sector down. So the question is whether or not demand can cycle in enough and give this market a shot in the arm and a boost. I'm going to say probably, but this idea of running into the 21, 22, 23 mark, that right now just is not on my radar.
Brian, always appreciate the time. Anything final you would mention or reiterate to folks here on the show today?
Just keep that marketing pencil sharp and keep safe. The harvest season's wearing on. Take your time. Easy to make even something like getting off a combine. I know of somebody who took a tumble. Just one step at a time. You'll get there. Interestingly, I'm reading a book on habits, and just a lot of small little things get you to big things. So just do all the little things right. That includes marketing.
Great, wise words there. And I know if folks want to talk to you about their marketing plan and more, a lot of ways to reach you: phone call, email, etc. How can folks get in touch with you, Brian?
I'd say with a phone call, 800-334-9779. That would be one way. The other way is to email me, Brian with a Y, at totalfarmmarketing.com. I like the emails. I can get back to you on that. And you can read at your convenience, or check out our website, totalfarmmarketing.com.
Brian Doherty, Senior Market Advisor at Total Farm Marketing. Thanks for joining us here on the show, powered by John Deere. Always appreciate it. Have a great weekend.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.